Good morning, good afternoon, and good evening. Thank you for joining us today for integrating ESG sentiment into investment strategies. Before we begin, let's cover a few housekeeping items. We will be recording today's session. The on-demand version of this webcast will be shared with you via email in the next few days. At the bottom of your screen are multiple widgets, and I'd like to highlight a few of these for you. If you have any questions during the webcast, you can submit them through the Q&A widget. We will try and answer these during the session, but if we run out of time, we will answer them via email. And please note we record all questions. Additional materials are available in the resource list. Please download those you might find useful, and you can find out more about our speakers via the speaker bio widget. We will be using interactive polling shortly and encourage you to participate. This webcast is being streamed through your computer, so for the best audio quality, please make sure your computer speakers or your headset volume is turned up. For the best viewing experience, we recommend closing any programs or browser sessions running in the background. This will help you conserve your bandwidth. Some networks cause slides to advance more slowly than others, so logging off your VPN is recommended, and if your slides are not progressing, push F5 on your keyboard or Command R on a Mac to refresh your page. We value your feedback, so please do complete the pop-up survey at the end of this webcast. I am honored to introduce our moderator for today, our Research and Portfolio Management Sales Director and CFA Charter Holder, Franita Neuville. Over to you, Franita.
Thank you, Renee, and good day, everyone. So both despite and as a result of COVID-19, sustainability and ESG broke new records in 2020. On the investment side, 2020 saw a record of $464 billion flow into ESG funds, and this is more than double the 2019 inflows, which was already a record year in itself. Let me just push my slide, there we go. Also to note is that the share of passive funds reached 40% of this number. On the financial side, the issuance of sustainable finance bonds totaled $544.3 billion during full year 2020, which was more than double the issuance level of 2019 and another all-time annual high. So the momentum will continue. We're expecting that owing to the national commitments to tackle climate change with countries such as China, the UK and Japan pledging to go carbon neutral, as well as sustainable finance becoming more and more an integral part of the asset management workflow, with the likes of BlackRock announcing that its $7 trillion in assets under management will be governed by ESG's considerations. In addition, Deloitte forecasts that ESG mandated assets could make up to half of all assets under management in the US alone by 2025. So we thought it would be interesting to actually gauge the view of the audience with a quick poll. So we've got 3 quick questions, which we would really appreciate if you would participate in them and answer on your screen. I'm going to be showing you the first one now. So our first scenario is, or our first question is, please indicate your job role. We've got options there: quantitative investor, discretionary investor, corporate, regulator, analyst, researcher, and other. So if you could please just indicate your job role. I'm going to give a couple of seconds for people just to do that. On the line, please. I can see we are already receiving some submissions, so that's wonderful. Thank you. I'll give it a few more seconds. Right, let's see the answers. Okay, great. You can see most of our participants are analysts, then other, then we've got researchers, also discretionary investors, corporates, quantitative investors, and we've got a few people from regulators also joining. Great. Okay, welcome everyone, and thank you for joining us. Next question how important do you think news and social media sentiment analysis is to investment strategies? The options there: critical, important but not always necessary, not important at all, or not sure. You could please just submit your answers there. I can see some opinions floating in, some answers floating in. I'll give it a few more seconds. Okay, let's look at those results. Okay, so most people believe that it is important, but not always necessary. Great, thank you for that. And then our last polling question, to get into that one: are you currently using ESG sentiment in your investment process? Straightforward answers here. It's either yes, yes a little, no, or I plan to start. And again, I'll give a few seconds there for people just to answer. Okay, great. Going to switch to the answers here. Thank you, everyone. Okay, so very much equally weighted here almost. A lot of people, about 27% or most of the attendees are actually using ESG sentiment in their investment process at the moment. So that's wonderful to actually hear. Great. Well, again, thank you, everyone, for your responses. Much appreciate your participation here. Just before we actually get into the discussion about ESG and media sentiment, it's quite important for us to distinguish between the two different types of ESG data you are now able to access through Refinitiv, right? When talking about ESG data, we have to consider two very distinct data sets. The one is corporate reporting-based data and ratings, and the other is news or social media-based ratings. So company reporting-based ratings provide access to a structured view of a company, reported, publicly available, and heavily textual data, which usually gets interpreted and transformed into ESG ratings involving analyst expertise. While, on the other hand, media ESG sentiment enables understanding the public's perception of a company's performance via numerous news and social media sources, the power of artificial intelligence or AI. There are some key differences between corporate reporting-based ratings and ratings based on media sentiment, which includes the source of the information, the process of data collection, the frequency of updates, and also the type of historical series. And also important to note is that the rating methodology is, however, aligned across corporate reporting-based ratings and also media sentiment ratings here. So corporate reporting-based ratings are based on information sourced from corporate filings and RTRS news by using analysts supported by artificial intelligence. The frequency of updates is slower, as you can see, and we are only expecting to launch point-in-time data in H2 this year. Alternatively, media sentiment ratings are built up by using more than 4,000 premium news and over 2,000 social media sources. The data collection is done through artificial intelligence and natural language processing, or NLP, and updated by the minute, which is much more frequent than the weekly updates for the company reporting-based ratings. And furthermore, the point-in-time data is already available for media sentiment ratings. The ESG media sentiment discussed in this webinar today is built on Refinitiv's methodology and on MarketPsych's multi-decade expertise in the field of natural language processing to ensure a high-quality value proposition by using both these data sets. And for instance, social media is often seen as having the potential of being a leading indicator for corporate reporting-based ratings changes. With that, I would like to introduce MarketPsych as well as its CEO, Richard Peterson, to you. So MarketPsych data produces psychological and macroeconomic data derived from text analytics of news and social media. MarketPsych's data is consumed by the world's largest hedge funds, banks, and governments, and also asset managers. And Dr. Peterson is a psychiatrist and an award-winning financial writer, an associate editor of the Journal of Behavioral Finance. He's published widely in academia and performed postdoctoral neuroeconomics research at Stanford University. So I'm now going to pass it over to Richard to further flesh out the sentiment angle of ESG performance for us. Welcome, Richard. Thank you for joining us, and over to you.
Thanks, Franita, and good evening or afternoon to everyone. Thanks for joining today. So I'll be talking about ESG data and, of course, specifically quantitative analytics on ESG data, because we find that using systematic ESG data allows us to develop new insights year after year across thousands of global companies as to which ESG activities and which ESG mentions of these companies seem to correlate with future outperformance of their share prices. So as investors, of course, we are often looking for not only the good companies, but the good companies that will outperform. And that is one of the interesting insights that comes out of this, is which companies and which investments by companies in ESG activities lead to share price outperformance versus which ones seem to maybe not matter, or in some cases actually lead to longer-term underperformance in the value of the company. Because, of course, if the share price is not sustainable, then the sustainability activities are themselves unsustainable. So to look at this type of data, as Franita has already gone over, there are two types of data, broadly speaking, in the marketplace. The Refinitiv data embodies the corporate perspective. It's really a paragon of how you look at this from a human analyst perspective, how hundreds of people can look through corporate filings and press releases and other information from the company and find out how is this company performing from a sustainability perspective. Versus others, including our data set, look at media analytics or the real-time flow of information about a company. How do third parties see that company in news and social media and other sources that are looking at the company objectively rather than from the company's own perspective or the company's own reporting? So that's what we're looking at today. And you can see a number of the different providers in this space here. And of course, we are working directly with Refinitiv to produce the current data set that we'll discuss. Now, the challenges with all of these different data sets is that there are different methodologies, and these different methodologies, of course, lead to different scores. So a company like Tesla can be scored as 100 on the environment score by MSCI, but 0 by FTSE, for example. And the question then is, how could someone score at 0 and not someone else score at 100? What's the issue with this data? And what it comes down to is, in this case, how are factory emissions counted? And if the company doesn't report its factory emissions, then it's scored 0 by one provider. But if its product emissions are actually quite low, then it's scored 100 by another provider who doesn't consider factory emissions. So there are these different types of factors, right? Factory emissions, product emissions, etc. And so what we're looking at here is, how do we create a consensus around what's happening with the company? And in our case, we're looking at a consensus from the external perspective, from the media perspective of overall, generally, is this company performing well? And we're not only looking at that consensus, but we bear down in this data set onto many individual factors that I'll show you. So the other challenge that comes from these different methodologies is, of course, low correlations between data sets. And so we can see some academic studies showing outperformance from ESG data. Others are showing underperformance or perhaps no performance. And the explanation for this tends to be the methodology behind the data, also the year the data was done, the universe of stocks studied. There's many of these differences, and I'll show you a couple of reviews here. So an academic review in 2015 showed that 90% of the ESG studies on performance show the non-negative relationship, meaning essentially either neutral or positive relationship between ESG scores and stock price performance. So now, obviously, there is an incentive to show this type of result, including in a Journal of Sustainability. But nonetheless, it was a meta-analysis, and so it did show, reviewed 2,000 empirical studies. Now, we can always quibble with the methodologies of these studies as well, and we should. So I will also look at an industry review. So in the industry, of course, we have a greater incentive to show negative relationships because we need to be skeptical. We need to be honest with ourselves and our investors about, is this actually going to lead to outperformance? And Bank of America did a review of the 3 leading data sets, Refinitiv, MSCI, and Sustainalytics. And this was in late 2019 that they published their results. And they found that there was investment outperformance using ESG scores across the data sets. And that the outperformance, though, was isolated to the last 5 years, so from 2014 onwards. And then the question arises, if this is only 5 years of outperformance, what's happening? Is this actually a herding effect of a migration to sustainability strategies? Or is this truly a fundamental effect at these companies? And as investors, we need to know that because we don't want to be investing in sustainability assuming we're going to get long-term outperformance when we're actually just in the middle of a bubble in sustainability investing. What then they also looked at were metrics of corporate performance like cost of capital, earnings stability, and a number of other value and other factor-based investing strategies. So in a subsequent study, they looked at dividend strategies, and they found that those were enhanced by ESG. They looked at valuation. That's enhanced by ESG scores. So they found that ESG scores across the board would lead to 1 to 3% increased alpha in a variety of fundamentally factor-based strategies that are used in the quantitative investing space. So what they were concluding is that this is a new source of information, and it is useful. So we have both industry and academic reviews that indicate there is value in this data. Regardless of the fact that the data seems to be inconsistent across sources, that there are lots of low correlations, and while these exist, broadly speaking, there is value in this data. Now, our attention has been turned, of course, to social media, and that's what we'll be talking about today, as well as news media, because as you can see here, there's a lot of controversy, ESG controversy conversations happening in social media, as well as in the news media. This is a blog post by an activist in Bali showing plastic on a beach after a storm, and this is not staged. This is actual, I mean, besides her mermaid outfit, but this is not staged in the sense that there really is this much plastic on the beaches in Bali after storms. I lived there. My kids went to the green school. We saw this a lot. We talked about it. It's a real problem, a huge, huge issue. And this is not only in Bali, of course, this is around many of the Pacific Rim nations. And here now in Africa as well, there's huge shoals of floating garbage in the oceans that are washing up. In any case, social media is calling attention to this. Does the social media attention lead to action by the Indonesian government, for example, to take care of this? Does it lead to bans or boycotts of products like Danone single-use plastic cups that are prevalent in what you see here on the beach, I can tell you. So is Danone being affected? Is Indonesia being affected by foreign investors? Maybe. But let's look at some of the data. This data allows us to look at maybe there are impacts on share price performance. Maybe there are impacts that really impact the pocketbook of entities like Indonesia or the French company Danone, who makes the plastic used in many of those items on the beach. So this is Elon Musk smoking marijuana on a podcast in the middle of the day on September 7th, 2018. This was released you can see around 12:30 Eastern time, 12 o'clock Eastern time. The news came out. And he was quoted as saying, well, I mean, it's legal, right? This was during a period of questionable judgment by Elon Musk in 2018 when he had called a British cave diver a pedo. He had been indicted by the SEC, or shortly after this, he was indicted by the SEC for stock price manipulation after claiming that This Saudi sovereign wealth fund was going to buy out Tesla. So the blue line here is the overall management sentiment around Tesla. So management sentiment is the positive versus negative impressions, the overall weighting of positivity versus negativity expressed about the management team at Tesla. And obviously that includes the CEO and other people in the top leadership positions, the board, the directors. In this case, clearly it's about Elon Musk. So you can see in yellow, the red dotted line is the share price. And you can see how that was correlated with the decline in management sentiment, with the overall impression of Elon Musk's management as being really quite negative. And this is a minute-by-minute score. So we're able to capture this not only daily or hourly, but we can even see minute-by-minute what's happening with a company based on the media flow. And again, this has to do with social media's prevalence, news media, and how people are responding to controversies in real time in the media. Now, another question is then, does this matter to share prices? Does it matter if Elon Musk has a one-day drop in his management sentiment? So when we look at thousands of companies, and actually in this case it's not thousands, it's the S&P 500, when we break them down month after month by their management sentiment score for each company, we see that the top 10%, the top decile, outperforms the bottom decile month after month. This is a monthly rotation model. What that means is every month we rank those companies by their 1 month management sentiment according to the media. The ones that are the most positive, we buy at the beginning of the next month. We buy the basket of 10% of those, the 50 companies, and hold that for a month, and then we reweight them and balance it again. And so you can see the performance of the top 10% versus the bottom 10% in the S&P 500. And this is about a 2% average annual spread between the two. So there is some value in having positively perceived management team, according to the media. So when it comes to governance, this is consistent with academic research on the value of corporate governance, especially shareholder protections, in driving stock price performance. So I'll now give you some background on this type of data, how it's created, and then we'll go into more studies like management sentiment, because there are some very interesting insights that come out of this. There are also, of course, some negative insights. There are some ESG activities and ESG findings that indicate some companies who are investing in ESG are doing it poorly, that maybe some ways of investing in ESG are not the right way to do it. And I'll show you which ones seem to be the most productive, for example, investing in the workforce. So, but how do we do this? How do we determine these scores? So our firm is a natural language processing company. That is, we scan language text in the media, and we break it apart into key components using high-speed algorithms and high-speed computing infrastructure on the cloud to bring in all the news and social media we can gather, specifically focused on business as well as ESG factors. So we have 6,000 global sources that we have found meet our criteria. Now, one of the sources could be a large social media platform. So 6,000 is a lot of different platforms and news media providers. We break it down into analytics scores based on each article, which we then roll up into indexes so that from millions of articles a day, we're able to create time series for each company over time, as you saw with Tesla. From these, we can actually create predictions as well, and we do have a product with the StarMine team at Refinitiv where we created a simple daily score that's a predictive score for every company, not based on ESG factors, but some of them are actually. It has some governance factors. And then lastly, recently we created this ESG product that we're discussing today, and that launched in, I believe, January of this year. So these are the 3 products that we create with Refinitiv. We actually started as a hedge fund. We had the first social media-based hedge fund. It was a quantitative fund, and that outperformed the S&P by 24% net of fees, but it was very difficult to raise money for that type of strategy, even though it had been running for 2 years. So we turned to Refinitiv and we said, look, we have this great technology that analyzes media and language, and it breaks it apart into concepts like emotions and themes, and we'd love to be able to apply this to stock price, currencies, countries, and also to analyze sustainability. And so we've done that. We've created these 3 different products with Refinitiv. And we now have about 60 academic papers on this data and a book as well called Trading on Sentiment about these data sets and how we create them. So this data set, the ESG data set, covers over 30,000 global companies and 250 countries and territories. And it has a history back to 1998. So if you've looked at data sets like this, it's difficult to find anything with a history back to 98 that's consistent. In our case, we do have consistent sources and consistent methodology back to 1998. We have a systematic way of including companies, so we don't have just a basket of companies being dumped into the feed every year or two. Rather, what we've done is looked at the market capitalization of companies and then any large unicorns or private companies in the top tier, starting in 1998, and then rolling it forward every month. We then look again what's in the top market cap tier globally and in the largest countries, and then we add those in. So, but we do have pretty extensive global coverage, over 3,000 Chinese companies, for example, 6,000 plus US companies, et cetera. And we do have multi-language capabilities. So we are looking now at 12 languages. I won't go and name them all, but you can imagine the top 12 economically important languages, including some smaller ones like Indonesian and Italian. This is AI-based in that we have machine learning components on several parts of this, including the language translation, as well as, of course, in how we classify themes in the media. It's highly granular. As you'll see, we cover over 100 controversies and topics in this data set. So you can use it for risk management and event studies as well. And it is real time in the sense that it comes every 60 seconds with a new data point for every company. We have some news and social media together. And actually, in our advanced feed, you can get news and social media separately. And we do plan research over the next few months where we'll be looking at the difference between the news perspective on a company, on their ESG activities, and the social media perspective on their ESG activities. We do have mappings, of course, to all the major company identifiers, QSIP, ISIN, CDAL, PERM IDs, RICs, tickers, et cetera. So you won't have too much trouble mapping companies. And then this is also mapped to the Refinitiv ESG product in our core feed. So Refinitiv has 10 major categories that they cover with ESG, as well as pillars and ESG controversy score. We've created parallel versions with this so that you can see not only with the Refinitiv score, the internal perspective of the company and the corporate filings, but also the external media-based perspective, and you can compare them side to side, and they are standardized and easily comparable. And then we do have these also mapped to the UN SDGs, and through Refinitiv, we're working with the SASB framework to map to that. So in terms of creating the data here, as I said, we're doing the natural language processing on companies. This is something that you may have familiarity with. I saw that about half of you have worked with this type of data previously, or to some extent. So in a phrase or in a headline like this one, shares of China's Luckin Coffee plummet 80% after after investigation finds COO fabricated sales. So we pull out entities like China, geopolitical locations, entities like Luckin Coffee, and then meanings like bearishness or management investigations. There's 4,000 meanings that we actually track, from tiny details like pollution cleanup or arsenic poisoning associated with a company. We can then roll those up into larger indexes. So arsenic poisoning might go into industrial accident, for example. We also, of course, would have gas blowout, oil spills, you name them, methane flare-off, et cetera. All of these go into our top 100 indexes. And we have this data from 1998 to the present, so there's really quite interesting dynamics you can track over time. So this is the management trust index for Luckin Coffee. And you can see it plummeted, of course, when their accounting scandal was released. And this is another version of Luckin Coffee. This is how the data appears to our data feed users. So this is a daily data sample. And as you can see, it comes every day about 30 minutes before the New York Stock Exchange close. You'll have one version of news, one version of social media. This is the advanced feed. And you'll receive a number of different types of data columns. One is a counter column, so you can see the number of ESG-related mentions of a company in the media, as well as the amount of buzz about that company in the media, buzz being the number of themes and emotions that we track. And here you can also see, for example, litigation. So litigation is over here about Luckin Coffee, and I emphasize that because I'll show you a chart of that shortly. So this data in raw tabular form is essentially a table of numbers, but where it really starts to provide a lot of value is both in quantitative strategies and, of course, visually. So here's Luckin Coffee with a visualization of the litigation index. And you can see that it was a very low, almost zero, near zero index until February when, actually late January, when Muddy Waters, a short seller research firm, published a report about Luckin and said there were accounting irregularities. And so suddenly we see this rise in litigation as more and more people are discussing that there's a problem at Luckin Coffee and there should be regulatory action or litigation against the company to correct this. And then finally in April, the big headlines broke that the company itself reported it had sales fraud, essentially misreported sales. So some of these data indexes can be used as early warning in risk management tools, of course. Here's a number of the indexes. This is too many, of course, to read, but I wanted to give you a sense that they're organized by, for example, here, categories that are parallel with the Refinitiv ESG categories. So we have an emissions category where we have indexes. I mentioned methane flare-off, for example. Methane flare-off would be a negative on the carbon emissions improvement category index, as well as the airborne emissions improvement. It's a negative on both, obviously, because methane affects carbon, especially if it's flaring off. So we have these various indexes that can be used for tracking environmental activities like recycling or environmental investment. I'll show you some examples from environmental investment shortly, as well as some of these others, like we talked about management sentiment. We'll also talk about some workforce sentiment, like workplace sentiment and workplace development in subsequent slides. From the community category, some of the more interesting ones, because community is quite a prolific one because of social media, we see trust in the company. Do people trust the company and its products? Are they angry at the company? Both of those have been quite interesting in our research as well. We can also create visualizations like scorecards with this data. And so this is a widget that we have internally that will be available on our Icon app in about a month and a half or so. So you can see Luckin Coffee's scorecard. Now on emissions, on the environmental score, Luckin Coffee is quite good because, of course, Luckin Coffee is largely electronic. They use apps for ordering. So people don't have to stand in line and wait. They have had a number of nice initiatives around environmental factors. However, socially, not so good. People do complain about the app and the way they have to wait to get their products, apparently. And then, of course, governance is very low because of the sales fraud. So, and you can see over time here, this other chart of the ESG score. ESG was pretty good until the sales fraud, and then you can see the decline in the ESG score, and then controversies. The ESG controversy score really plummeted, of course, when the controversies broke publicly. Actually, this plummeted when the Muddy Waters report broke. So most companies don't have short sellers after them. So that's the general overview of the data, but I think where many of us find the value is in systematic research. How do we look at this data systematically? This is not systematic research, but this is an introduction to it. So there are many academic and I guess casual studies that suggest relationships. For example, here's one right in the middle of the page saying that the number of women in the executive committee in UK companies seems to correlate with the profit margin. Now, does that mean it's predictive of the profit margin, or is it that more profitable companies are hiring more women? That's something that needs to be studied, and that's something that can be studied with this type of data. Management diversity score, you can see in Citigroup and many of the major banks, they had very non-diverse management teams until, in the case of Citi, around 2017, they started hiring to the board a number of more diverse candidates. And so you can see here when they ultimately named Jane Fraser the CEO at the end of 2020, a big spike in our management diversity index for Citi. So this data can be used to screen companies by the amount of activities that they're taking, say, towards diversity. You could create a ranking of global banks and find that Citigroup is near the top for management diversity, or at the top, because of their efforts in this regard. So it can be used for screening. It can also be used, of course, for case studies like quantitative portfolio formation. So I showed you that quantitative result on management sentiment. It turns out that not only is governance and how the media feels about the governance important, but how workers at the company feel about the workplace is also very important. Now, workers are posting on social media, and they talk sometimes about their workplace, what it's like to work at the company. Do they enjoy their boss? Do they enjoy their working environment? So we did a study, again, month after month, starting in 2006, where we ranked companies by their workplace sentiment. And in this case, we looked at the extremes, where we buy the 5% of S&P 500 companies, the top 25 that are the highest in workplace sentiment, the most positive. And then we also buy the portfolio of the ones that are the lowest, and then we track them over time. And we see that companies that have more happy workers and happier workplaces do outperform over time. Now, we worried that maybe this was picking up only tech companies because they have ping pong tables and, a lot of perks. But what we found is, no, it's actually a number of some consulting firms. But there was a good variety here, even Paychex is in there. And then on the lower side, we did find some usual suspects like McDonald's, Flowserve, Tyson Foods, which is a chicken processing plant, UPS delivery firm. So there were a number of companies that you may recognize, have been in the media for scandals around the workplace. But what's nice about that is this data set creates an easy way to rank and identify those companies quickly and systematically from the moment when the news broke. So you can go back and test, does this matter? And as you can see here, it does matter. So we do have these studies available in Python notebooks. So if you do trial this data, you can have access to this research and the code behind it. So you can replicate these studies and see how this works. We also see this internationally. This is China. And we looked at the top 300 companies in China, the China composite. And so what we see here is, in this case, we looked at the highest 20% and the lowest 20%. And there is a split, whether we do 20, 10%, 5%. But with China, we wanted to use a larger basket here. It's a smaller split, but you can see it really emerged around 2014, 2015. And companies that had more references to workplace development do seem to have outperformed. And it's not only workplace development in China. There's other sustainability metrics that have been quite productive in the Chinese market. Environmental investment is another one where companies focused on green technologies have also done very well over not only the last 5 years, but over many, many years. Another way of looking at this data, besides one basket of the top performers and one of the bottom performers, is to simply look at the top performers. So can we select the best companies? Now, this is an innovation score that we have. So we look at the amount of references to innovation at a company. And as you can see, this companies ranked high on innovation did outperform, as Bank of America found, since 2014 or so. So there was likely some herding effect here, or part of the technology boom affected this. And this is in the S&P 500. But again, looking globally, we see this is also true in Japan and some other countries, where companies that score high in innovation tend to outperform. And so what we show here in Japan is similar, that if you take the 20% of companies that are the highest in innovation, and then you also compare a basket of the lowest 80%, so every other company, you can see that Japanese companies high in innovation tend to outperform those that are lower. And of course, in Japan and the US, these are technology-heavy indexes. And this also works in looking at environmental investment, which I had mentioned when we went over the indexes. This is an index, an example where we looked at the Russell 3000. So we looked at a much larger universe. And obviously, I can go through and show you lots of different studies like this. And I'll go a bit faster on the remainder of these, but I just wanted to show you there are some benefits, for example, to environmental investment. So companies, and it's not only since 2014. In this case, we see since early on, in using the universe of all large, tradable U.S. companies, the Russell 3000, we see that if you buy the 10% that are the highest environmental investment, over many years, they've been outperforming. It's not just recently, which you can see is quite dramatic, but over many years, we've seen outperformance in these top companies that are investing in the environment. And of course, Tesla is one of the top ranked ones here, but also MSCI is there, Alliant, and a whole variety, some utilities as well. So this is an equally weighted basket, 300 companies in that top blue line. And then lastly, where we see use cases with this data is risk management, which I've referred to a few times, because we want to know if the management has poor judgment, like Elon Musk in terms of, smoking marijuana on a podcast or other tweets that he's done, does that actually correlate to negative share price returns? And it should be noted with Elon Musk, while his management sentiment drops intraday, it often recovers because there's so much social media and media enthusiasm about him that even with the lower scores, he's not necessarily at the bottom of the pack. So this is accounting controversies, another ESG score that we track. And again, looking at the scores that are highest in accounting controversy. So previously, I was showing you the most positive type sentiments, and what if we track a portfolio of those companies? Now what I'm saying is, what if we exclude a basket of companies from your portfolio? What if we say that companies that have bad scores on these controversies, what if we cut them out, like Luckin Coffee with its litigation score and its controversy score? In this case, a very specific type of controversy is the accounting controversy. And what if we cut that out? Well, what we see there is those companies that have high accounting controversies, these are the S&P 500, significantly underperform those that do not have any accounting controversies. So pulling them out naturally leads to outperformance in your portfolio. So this can also be used for risk screening and elimination of certain companies. And here's a variety of those risk management. The one that I find most interesting here actually is sustainability controversy. You've all heard, of course, that sin stocks outperform. That's a general wisdom of Wall Street. And the various studies that have shown, for example, tobacco, firearms, and gambling stocks outperform. I think first was in the late 1990s. And you continue to see that type of phenomenon here. These are climate sin stocks probably driving this, oil stocks largely. What you see here is the top 10% of controversy stocks for sustainability controversies, starting in 2006, actually outperformed until about 2014. And then they started underperforming, and they've actually not even grown since 2014 in terms of the share prices, while the other 90% of companies that are not controversial in terms of sustainability have been outperforming. So really the laggards for the last 7-8 years in the US markets have been unsustainable companies. So there are these very interesting findings as well that you can see with this data about what's driving markets now. So I've been talking about companies, but we do, of course, also have data for countries. And this is a view of sustainable innovation by country in the media. And this is a view over time since 2006 again. We have Norway, Japan, and Costa Rica in the top 3. Now, Costa Rica is often a surprise to many people. If you Google sustainable innovation by country, usually you'll see the Nordic countries on the top. It's not a very thoughtful list, I would say. In fact, so Japan clearly does a lot for sustainable innovation, as does China down here. China actually spends twice what the EU spends on green technologies, for example. Now, China, of course, has some other problems with sustainability, but they are making a concerted and expensive effort to create more sustainable technologies there. Now, we also have Dubai here. Dubai has been working hard in that way. So you see a number of interesting companies in the list that maybe were not as suspected. Now, Costa Rica is number 3. Actually, we were surprised when we looked into this, and Costa Rica has given 30% of its land over to conservation, and 98% of its energy comes from renewable energy sources. So Costa Rica has been quite a sustainable leader. And fortunately, on that chart, I'll go back to that, you can see that actually sustainable innovation has been increasing a lot in the media over time. So back in 2006, very few people talked about it. That's why we don't plot it before 2006. But since then, you can see this big increase in the amount of sustainable innovation as part of the narrative around individual companies and fortunately around stock prices as well. Another thing you can see with this data set is public health issues. Obviously with COVID, that's on many people's minds for the last year. This is back when COVID started. We've been tracking for many years an index called human infectious disease. And so we looked at the prevalence of human infectious disease in various countries. For this version of our data that we just launched in January, we broke that index apart into pulmonary diseases or respiratory diseases versus primarily gastroenterological or GI diseases. And so this is human disease pulmonary. That's an index we produce. And you can see how it took off in China in late December and early January. Then you can see it taking off. And it really didn't seem to affect the rest of the world, amazingly, even though, from my perspective as a physician, we know that these respiratory illnesses are likely to come, especially given how infectious it was in Wuhan. But then it hit South Korea. You can see it's popping up there. That was really a big warning sign. Italy. Now it's in Europe. It's broken the bounds of the Asian continent. And then you have the blue line in the USA, and it did tick up a little bit, but it didn't really take off until late February in the US. And so what's also interesting is the countries that seem to pop up the highest probably took the most action. So this is the percentage of mind share in the media. By the way, down below, you can see the axis here. It's 2020, November, December, January, February, January, February of 2021. I'm sorry, 2020. And here's the stock market. And you can see the stock market. As this really starts to pick up in Italy, then you can see the stock market had topped out and started to have its little crash last year. So the mind share in the media of the discussions of COVID seemed to really be dominant in China, South Korea, Italy. In the US, it was not as large a percentage of the media. And of course, the actions taken were not as strict as in other countries to contain its spread. There may be some relationship there. Another type of index we track is government corruption. So again, governance is clearly something of importance. And you can see here an interesting ranking of government corruption. Brazil comes out on top with this data set. Then Russia, India, Indonesia. There were some corruption scandals in South Korea, so that's up there as well. And then down at the bottom, you might expect Germany and Japan to be at the bottom, but surprisingly, Saudi Arabia came in at the bottom of this G20 countries. And one reason for Saudi Arabia to be there is because the system there doesn't perhaps see corruption. If you have a monarchy, it's not necessarily corrupt to give your cousin, a top position in the government. That might be normal. So the media doesn't focus on corruption in Saudi Arabia as much as, say, in some of these other countries where there's more of a scandal brewing. It's more of a norm in a monarchy. So sort of interesting perspectives in this data set as well. So summary findings, quantitatively, we do see that, for example, S&P companies with good management outperform. We also see this in the Russell 3000. I just didn't show you that data set. We see that companies with happy and purpose-driven employees outperform, in fact, quite a bit, about over 4% annually at the extremes. And this is true not only in the US, also in China, as I showed. Innovative companies in the US and Japan and India as well, I believe, also outperform. We see about 2+% annually for innovation outperformance. And then we also see that we have high controversies. We can use this data for screening out of negative companies. So, sustainability sinners, so to speak. And that when we avoid those, we do get nice outperformance in larger portfolios by cutting out the high controversy companies. So keep in mind, media flow is faster than other ESG scores. So we can get a leap ahead of other providers because using this data, we can see when this is hitting the media and when it hits a critical threshold faster than others. And it also allows us to unearth hidden gems and find ESG laggards in this data set because we're covering so much. We're covering 12 languages, global media, 30,000 companies. So we're able to really see deeply into what's happening globally around ESG activities at different companies. So I look forward to your questions. This is big data, and there are very likely good investment returns to come from this, but it requires time. So we will give you access to our Python code and our Jupyter notebooks to help you. If you would like a free trial of this data set, please do let us know. So I look forward to your questions. Thank you.
Thank you very much, Richard. There are a couple of questions that have come through, and everyone, please remember to keep on posting. We'll, if we can't get through all the questions now, we will promise to endeavor to get back to you afterwards. So I'm just going to start off, and I guess one of the themes that really came through, Richard, was causality. So we had a couple of questions around that, and they're asking, won't using media ESG sentiment tools such as MarketPsych actually create feedback loops in the markets? And also another one that came through on that, just around causality specifically, and the causality between stock returns and the social media or news ESG scores. Do MarketPsych indicate higher stock returns, or do better stock returns actually propel MarketPsych scores higher?
So for the first question, that's a great question. I love that question because we have to think very deeply about this. It's quite interesting. So when we look at what drives stock prices generally, an alpha decay in stock prices, we see that, for example, value investing has been a very powerful and strong narrative that most investors follow because, of course, if a company has higher earnings, we should value it higher, right? Yet the outperformers for the last decade or so have not been value companies. It's been companies that are reinvesting all of their earnings in expansion and, for example, Amazon. And so it's quite an interesting phenomenon that value investors have tremendously underperformed despite the prevalence of that narrative. This data set is not at the top of people's consciousness. People are not looking at the media and thinking about it as being great for investing. There are, of course, media stories occasionally about Reddit traders and others, and that becomes part of the narrative, but it's not a primary narrative. And so it's just a bit obscure for most people because it also requires second-order thinking. So in game theory, there's this idea that we just take investment recommendations and we act on them. That's level 1 thinking. I'm sorry, that's level 0 thinking. Level 2 thinking is, or level 1 thinking is looking at what everyone else is doing and then acting based on that. And so your question is based on that. And it's a good way of looking at markets because markets have multiple layers of thinking. And in different environments, different regimes, we have different levels of thinking dominating the trading. But this data set is a data set about perception. What do other people perceive about a company? And that actually is a more complex level of thinking than what most people are used to. Most people just say, is the company sustainable or not? Just tell me. And they don't think about, well, but what is everyone thinking about this company and how does that relate to its future performance? And in fact, if it's actually low on sustainability and there's a controversy at the company, especially with the management controversy, maybe they'll take some action to fix themselves. And actually, the stock is likely to outperform because they've got a high controversy score, and they now seem to be taking action as starting to reduce that score. So we're actually, this is a company repairing itself. Maybe that's, we should invest in redemption or, improvement. So anyway, there's a lot of ways to think about this, but broadly speaking, no, this data is not oversubscribed. It's very unlikely that this will be, because of the nature of this data, people just tend not to like to think about thinking. So, unfortunately, so we end up with people mostly just reacting in markets. And what was the second question for Anita?
So the second one, again, was around causality. And basically, they're asking whether they want to know whether the causality between stock returns and the social media or new ESG scores, do MarketPsych indicate higher stock returns, or do better stock returns actually propel MarketPsych scores higher?
Oh, I see. Well, the studies that we showed that MarketPsych is predicting stock returns. Those were not correlation studies. Those were predictive studies showing that a high level of a MarketPsych score in 1 month would predict the outperformance of stock prices in the next month. And so the bulk of the evidence that we've obtained indicates there is outperformance, and that has been continuing. Now, I used to say that type of thing with our quantitative research, and people would say, yeah, but you're not predicting anything. You haven't really showed that. So what we did was we actually set up a predictive model with the StarMine team at Refinitiv. We've been running that for over a year. That has been a top performing model It beats all fundamental factors in terms of how it's been performing as predicting stock prices. So media data has been the most predictive model since we've launched a predictive model based on it through the Starline team and publishing those scores publicly starting last January. So we have real evidence that has accrued that this is very predictive data. We also have evidence from this very small pilot fund that we created where we donate all of the profits to charity, to anger management charities. It's called the Anger Management Fund. It's a small pilot fund we have where we buy certain companies based on their ESG scores. And we've been running this for 2+ years now. And every year we donate the profits to charity. And so we've given to 7 or 8 charities around the world for various mental health causes and anger management causes. So we've, again, we're not taking any of those profits internally, but we find that this data has been very predictive, and I shouldn't say very, but it has been predictive, and we have evidence for that. It is causal. I mean, not causal, it's the data scores themselves do predict, in my experience so far, stock price returns, and in the evidence that we publish publicly.
Great. Thank you, Richard. The next question is around the languages that you support. So the question is, did you build the NLP models in English and then apply a translator, or did you build a different model for each language? Or is it a blend of the two approaches above?
We apply a translator. Yeah, that's a great question. So we don't do social media for those 12 languages. We only do structured news media because we find that social media, the translation quality still isn't high enough. But the machine translation for news media is very, very good in our experience. So we apply it there. Now, there are some differences in language, translated language across countries. So then we've had to modify our analytics somewhat depending on the country. Like in China, institutions have different nomenclature, for example, in one country than in China than others. So a ministry might be called, a people's group, for example, in China. So we have to change some of the nomenclature, but otherwise, it's done quite well.
Okay, right. Now we're jumping more to to the sources, but looking at social media specifically, can you maybe give us an indication of which the main social media sources are that you're using?
Yes, sure. So we have content from a number of sources. Twitter, for example, Reddit, we have content. There's quite a few. We have a feed of blogs that we use. Yeah, quite a few.
Okay.
There's a long list.
Okay,
I mean, if you would like to have a question about a specific source, feel free to let us know. I don't want to go through all of the thousands.
Sure. I guess tied to that also, we've had a lot of questions around, how do you filter for fake news?
Right. So we have several layers of technical filters that we use. For example, spam detection. There's different types of fake news. Of course, there's promoters who are promoting their own opinion frequently, sometimes for money. So paid promoters for stocks, for example. We, of course, companies promoting their point of view through press releases. So we screen out press releases because that tends to be a one-sided view. We screen out promoters. We look for robot activity. There's a number of techniques that we look for. Of course, we don't disclose this publicly, but we've got a number of classifiers for robots. We've long filtered out more than half of Twitter, for example. We find that's robot activity or it's just useless, one-sided activity. We were looking for perspectives that are somewhat thoughtful and that have multiple themes that they discuss, not just one theme and one sentiment. We tend to filter those out. So there's a number of techniques that we use to get rid of garbage in the data or, likely promotional activity or paid activity. Fake news, though, is tricky because, Donald Trump says something's fake, but then the other people publishing and say it's not fake. So, I mean, obviously we all have our opinions about who's right or wrong in that situation, but there is a sizable portion of people who believe one side and another sizable proportion who believe the other side of what's fake and what's not fake. So, and each of those groups of people are taking action based on that. So we like to just pull it all together and create a simple aggregate score of which opinion is dominating, which one is leading to the greatest overall score, the overall weighting. So, for example, if Donald Trump and his supporters say something is fake and they dominate the conversation and are taking action on it, then that's likely to be at the top of our score. Versus if the anti-Donald Trump group is doing it, then they'll be at the top of the score. So it really depends on who's the dominant people in the overall media globally.
Well, thank you very much, Richard. I think just to wrap up, there's been a lot of questions around how to access the data as well, how to get access to a trial, et cetera, et cetera. So I think if for those who've asked those questions, we will be in touch to reach out to you. If anyone else is interested in knowing how to get access, please reach out to your Refinitiv representative or contact us through either reaching out on this forum or through our website. Great. That we've reached the end of our session then. Thank you very much, Richard. Appreciate your time. And everyone who has joined and posted questions. We've had a lot of questions that's gone unanswered, which we will also be getting back to everyone on that has asked those questions. Good. And with that, we say thank you and goodbye.
Great. Thanks, everyone. Bye-bye.